So this is a video I've been wanting to do for a little while. This is my overall Bitcoin cycle structure analysis, I guess you could call it, where I think Bitcoin is going on the higher time frames. Now, I've pushed out a video earlier today on where I think Bitcoin is going in the next week, 2 weeks, 3 weeks. But for the next couple of months or potentially years, this is kind of a compilation of what I've found from watching people that actually know what they're doing, like Jason Pizzino, Michael Pizzino, and a couple of other guys like MCO Crypto. And if you've watched some of Michael's earlier YouTube videos from not 2024, this was the only thing I found on a quick Google search, but if you've watched some of his videos from the end of 2025, he talks about where Bitcoin is being treated like a commodity, where obviously it existed out of the global financial crisis, just out of it, kind of as a way to, I guess, prevent such thing from happening again in the future in 2009. So if we're going to treat it like it's done a full 18 and a half year cycle, then we would be treating the first bull market, I guess you could call it, as a wave 1, the first bear market as a wave 2, the second bull market as a bit of a wave 3, and the 2019 bear market as a wave 4, whilst this entire both 2021 and 2025 cycle as a wave 5. Now, the reason we're treating it like that is because the 2022 bear market was the first time that we dropped underneath a previous peak. If you remember that happening, this was peak fear through here. Everyone thought crypto was dead, it was never going to recover, and it does 700% out of that. But because it's dropped back underneath a previous peak, we had to consider that entire thing as a wave 5 extension, because otherwise Elliot wave would not be valid. Now, after every 5-wave impulse, you should see a 3-wave correction. And if I zoom out even higher, now if you think about this as in terms of 18 and a half year cycles, you could treat the first 18 and a half year cycle as a gigantic wave 1. This second, we could just say GFC 2.0, this upcoming recession. Jason and Michael Pizzino reckon it's going to be worse than 2008. Some analysts reckon it's going to be like a dot-com bubble. Some people think it'll be like a 1990s recession. Whatever it is, it's probably going to be a secular bear market that's not just going to be like a 2022 style, probably going to last a few years longer, like a 2008. And the next 18 and a half year cycle would be your wave 3. Then the next global recession is going to be a wave 4, and so on. Now, I'm not going to go into any bigger cycles than 18 and a half year cycles for the purpose of this video. But if we just go 18.6 year cycle Australia, you can just see every 14-ish years up, you should see about 4 years down. Now, excuse me, don't mind having a casual sneak peek into my search history. I like Revolut, and I like working out, and I do have a dream car. Anyways, back to the purpose of this video. Sorry, excuse me there. Got a bit of a hiccup, but you can see in a 3-wave correction, excuse me, the wave A then becomes your impulse wave. So in this bear market, we should see another 1, 2, 3, 4, 5 down, and lining up with what Jason Pizzino says, for the next bull market, we should see 3 waves up into potentially a lower high. Now, Jason talks about maybe 90K, 100K, maybe 110K, but he says it's unlikely that we'll take out this 127K top or something like that, plus or minus a few $100, depending on what exchange you're trading on. But here's the thing. B waves, this higher time frame B wave right here, can overshoot the top of the previous wave 5 and still be a valid wave structure. So this next left translated cycle, if you go watch some of Jason Pizzino's videos, you'll understand what I mean by that, where the peak of the bull market happens in the left side rather than the right side. You know, it would be the first time in history something like that happens. Obviously, everyone said that was going to happen at the 74K top, and guess what? It didn't happen. But we do have to give allowance that this next bull market, even if it is a left translated cycle, could be similar to, you know, like a .com blow off top. Now, you've obviously seen the fractals on Jason Pizzino's channel and probably other channels on X and YouTube, where the stock market just goes straight up. Like every tiny correction gets bought up for like 6 months, 9 months, a year straight of just straight up price action. So if we do get something like that in, you know, end of this year, start of next year, we could see a very, very aggressive bull market for Bitcoin, where everything happens a lot faster. Kind of similar, I guess you could say, to this whole period through here, the start of 2024, you know, when we got all that ETF hype, Trump meme coins, blah, blah, blah. Were they Trump meme coins at the time? I don't even remember what was going on. But we just got that absolutely insane push. I remember the Solana ecosystem meme coins, the Sol price was going vertical, like market conditions like that obviously can't last very long. So if something like that does happen, maybe we push to 135K, 140K, 145K, where obviously we take out the previous top, similar to the 2021 cycle, where, you know, everyone thinks it's over through here in May, June, July, where, you know, this is probably just happening on a higher time frame now, where everyone thinks crypto is over. And then we get this absolutely monstrous pump, a very fast pump. Obviously, at the time, sentiment wasn't there because all that greed sentiment was through here. But maybe this time, being into a stock market peak, we get some crazy sentiment for a couple of months. We get so potentially, let's say we bottom in September, and we get this fast run up into, let's say, November. We get a pretty aggressive but short-lived correction. You know, maybe it only lasts a month or 45 days or 2 months, and then we get this huge pump which lines up with the stock market top. Now, with that out of the way, we would then see another 5-wave correction into the next bear market, which being a wave C, it doesn't, ideally you'd want it to be pretty balanced with this wave A, but it can and often does overshoot ever so slightly. So even in terms of a balanced correction, let's say if Bitcoin runs into a lower top and this wave C becomes a balanced correction, then say the low comes in at, say, 50K. That's a 75K correction. And then we rally to, let's say, 100K. If we get another 75K correction from 100K, that would take us down to 25K. And that could really get the fear going. You know, we've taken out the 50K bear market low. First time in history, a bear market low has taken out the low of the previous bear market. And that could be what we need to get set up for the next 18.5-year cycle, this massive higher time frame 1, 2, 3, 4, 5 pattern. So that's just a bit of my thoughts thrown together from what I have sort of guesstimated based on watching Jason Pizzino, Michael Pizzino, and a couple of other guys that know what they're talking about. But let's have a look at where we are in this current bear market. Now, I'm going to use the weekly time frame and do a little bit of analysis. And you can see right here in this black count right here, I'll just pull it up there so you can see what I'm talking about. We have technically completed a bear market. We have gotten 5 impulsive waves to the downside, which is pretty much this count right here. In pink. Obviously, I haven't drawn it to scale because I am on a logarithmic chart, just because I need to be able to fit in that first Bitcoin cycle where prices were so low. Like if I put this on a linear chart, it's going to look absolutely, yeah. Try drawing an accurate Elliott wave count when your chart looks like that. So that's the only reason I popped it on logarithmic. But we have actually gotten a valid 1, 2, 3, 4, 5. Now this wave 4 has technically breached the high of that wave 1 in terms of bars and candles. But if we look at lines, it has not, because the lines are only focused on, I believe lines look at closing prices. Yes, so the lines ignore all the price action inside the bar or candle and just looks at the closing prices. If you look at this purple line here, we got 86.7 and we got 82K. So if we use lines, this is a valid 1, 2, 3, 4, 5 count. And if I go back to lines, you can see we have taken out this 66K low through here because we've gotten closes at 60K. So we do have a valid 1, 2, 3, 4, 5 structure. Now this wave 5 does not look very balanced at the moment. It is significantly smaller than the wave 3 and the wave 1 before it. If I do a price range calculator, you can see the first decline was about 36%, $46,000. The second decline was 39%, $38,000. So less dollar value, but higher percentage value. This next decline right here, we're only 31% and $25,000. So in terms of dollar value, we're 50% less than the previous decline. And we are, as a percentage, where, you know, the previous two are within about 3% of each other, so within 10% of each other in terms of percentage value, we're 20% different in terms of percentage value and 6% in terms of an actual value. So being that wave 3 was smaller than wave 1, we know that wave 5 has to be smaller than wave 3 for it to be a valid wave count. And for this wave count to be valid, I'm going to draw back to lines, and I'm only going to look at the lines because that's what I'm drawing my wave count based on. So if I realign everything based on lines right here, we've got 29%, 29%. It is almost smack bang balanced. But this wave count right here is 27-ish percent, meaning that if we look at it from a lines perspective, which we probably have to do now because this wave 4 has breached the wick of that wave 1, we do actually have a pretty balanced count. However, time is not right. I've talked about this before. This would be the shortest bear market in Bitcoin's history if that was the low. Meaning that I do think we will probably see a close at around $58,000 to get us that a bit more balanced of a count. Or if we do get a wave 5 extension, which as Michael Pizzino says is common commodities, we could see a slightly bigger wave 5 because I haven't drawn this exactly to scale. If I give it a bit of tolerance, I do believe if I give the required tolerance, this wave 3 is actually bigger than the wave 1. I didn't test this myself. I did a bit of researching earlier, and I do believe that this wave 3 was slightly bigger. I found someone else's chart, but I might actually have to zoom in and do some more exact testing myself to make sure that this is valid. But also, I would give it a little bit of nuance because this is a Binance chart. Obviously, no matter, depending on exactly which chart you look at, whether you look at the index chart, the Binance chart, the Coinbase chart, or the Bybit chart, or whatever other exchange you're trading on, it's probably going to vary a couple $100. So if we assume that wave 3 was bigger than this wave 1 here, that does give us the potential of a wave 5 extension. And if we have a look back and see what Bitcoin has done in previous bear markets, we often do get a lower monthly close compared to the one where we test the 50-month triangular moving average for the first time. You can see we got those monthly closes at 19.9, and we got 17.3 and 16.5. So I do believe we are going to see some lower weekly closing prices to complete a more balanced cycle count. But with that being said, the bear market cycle count is technically complete, meaning the low could come in at any time. And if I reverse that psychology, if you remember through here, Jason and Michael Pizzino are saying, with that break from the August low of 2024 all the way up to that 108 and 110K top at the start of 2025, end of 2024, that completed the bull market structure. But time was not right for a top, meaning that even though we saw an aggressive correction, we did get some more highs, and those highs were only slightly higher. Like, if you traded on leverage, they were some pretty good moves. If you got, if you had an indicator that got you in on, say, a breakout and you sold into the next top, you could have gotten some 30% moves in just a couple of weeks. Or, if you 20% moves in a few weeks, etc., 10x leverage, you've doubled, tripled your money. But if you were just investing, like buying and holding, you were only getting like 15, 20% moves over pretty much an entire year. If you bought the 2025 tops. Now, obviously, if you did what Warren Buffett does and you bought on max fear and sold on max greed, you probably could have made 50%. But this is probably the reverse for the bear market now. If you're looking at massive short positions right now, maybe the market only goes, 9% lower or, 13% lower. Is it worth the risk to the upside, because the bear market invalidation signal is going to come when you break the 33 fair value band and you get closes or higher low above it. That's 30% from where we are right now. If we break on top of that band and we get closes and higher lows, it's 27, 30%-ish move. So your RVR is 0.5. And even if you've got a strategy with a 60% win rate, if you've got a 0.5 RVR, you're still going to be losing money in the long run. You need like a really high win rate strategy, like 85, 90% to actually make money with such a low risk versus reward. So with that being said, Bitcoin is pumping as I'm speaking into the weekly close. So the analysis from my last video could potentially be right. But that is pretty much what I want to say, because the Bitcoin bear market structure is technically complete. And the whole period through here, I wasn't making any videos, but I was watching MCO Crypto very carefully, because he talked about how as soon as we broach this 59K low, the bear market structure is complete, because that would give us 5 waves down on the daily inside of a 5th wave on the weekly. Now, if I try and draw out a 5-wave decline, I guess you can sort of count that as a wave 2. It's not super balanced, but then we've got in a wave 3, 4, 5. The other way, or we could draw that wave 5 to there, sorry. So technically this low here at 58K completed that 5-wave count, but obviously we know that in commodities, wave 5s can extend. So we ended up getting a bit of a 1, 2, 3, 4, 5 extension inside of that wave 5, where we got a bit of a 1, 2, 3, 4, 5. Now, obviously, I wasn't charting through here. I mean, I wasn't making videos. I was watching videos from MCO Crypto, Jason Michael Pizzino. I think Jason talked about some stopping volume through here and signs of insider buying through this entire period here. So I just didn't feel like I needed to make a video because you guys know I love Jason, Michael Pizzino, MCO Crypto. I'm not going to make you sit here for 20, 25 minutes to listen to exactly the same thing you could have seen in their videos. And I want to give you some different analysis. And I obviously gave you my different analysis in my earlier video today, what I'm looking for to go mega long, the signal I'm watching for to confirm a move to potentially around $70,000, $71,000. But in the meantime, the Bitcoin bear market structure is technically complete. Time is not right, so I'm not going max DCA. Like I'm not going to, borrow money from the bank or something to invest, because there is a chance that the market could go lower, and it very, very likely will, just like the market went higher in 2025, because when time is right, price will reverse. And the last thing that I want to do is tie my money up, for ages on end. I'm just going to use this 2022 bear market, for example, like buying in on the lunar capitulation at $20,000 or, $18,000 compared to buying in on the FTX capitulation of 15, 16, 17,000. You were only down 10, 20, 25% over, 6-7 months, which as a long-term investor is probably nothing. And, 2 or 3 years later, you were up hundreds and hundreds of a percent. Either way, you probably didn't care very much, especially because in 2022, almost everything was going down. But right now, that's not the case. There are so many opportunities on the stock market to make money. Why would you want to tie your money up on crypto if the stock market is going to do things like that? Like, look through here. This was, what was it? Where's my October top? There it is. Micron Technology's done about a 6x rally in the time that Bitcoin has lost, 50%? More than 50%? About 50%? Or 50% from where we are now, but more than 50% at one point. Why would I want to be trying to DCA Bitcoin on the way down and watch my portfolio go into the red? Sure, even if it goes into the green months, years later, when I could be DCAing into something like this, well, you probably wouldn't want to be DCAing in right now, but all these higher lows, in a bull cycle, 33 fair value band is green. We're getting higher lows, buy the pullbacks. And, eventually the bull cycle will end. And, let's say I didn't get the exact top. Let's say band turns red at, somewhere through here and price cuts underneath it at, say, $700 and something. I've chomped a bunch of profits on the way up and I exit my entire bag. The remaining position, let's say after 6x rally, I still have 50% remaining and I chomp my remaining 50% at $800. I've still walked with 380% on half my position, and the other half of my position, I've averaged, 450%. Much better than DCAing into Bitcoin. So that's the difference between now and 2022. It's not really a secular bear market in a way. It's more of like a crypto bear market. I mean, if you're investing in MSTR, I don't really know what to say. It's just, capital efficiency, I guess, which is you've only got a finite amount of money, so put it where it matters. There will be a time when I get mega bullish on Bitcoin, and all of you know exactly what I'm looking for. But until then, I retain my mostly sideline stance. Obviously, I'll take, long short trades as they present themselves, but my large capital is going to be reserved for when we get a higher time frame bottoming signal. Anyways, thank you for watching. Please like, comment, and subscribe. And don't get yourself wrecked bag holding a massive short into the start of the bull market. Peace out.